Okay, you've decided that you want to go into business for yourself, and then you're wondering, okay, how should I set my business up? I know a lot of people talk about LLCs. I know a lot of people talk about S corps. Do I really need any of them to start my business? Well, I'm going to talk to you about business formation, the differences between those, and the pros and cons of them, so you can make the best decision going forward. Now, keep in mind, when you're starting a business, that legal structure is one of the most important decisions that you'll have to make. The structure that you choose affects everything from how you pay your taxes to your personal liability and your ability to raise capital. In other words, get funding. Now, understanding the key differences between those structures, sole proprietorship, LLC, S Corp, and C Corp, will help you make an informed decision that aligns with your business goals, both short-term and long-term. Now, I'm going to break down the pros and cons of each one so you can decide which one works for you. So, first, when we talk about sole proprietorship. Now, the sole proprietorship is the simplest and most common type of business structure, especially for freelancers and small business owners just starting out. People put out their name, they may even come up with a clever name, and then they say, okay, I'm in business, I'm going to offer a service in exchange for money. It's essentially an unincorporated business that you've created, and it's owned by one person, you, however, there's no legal separation between the business and you as the owner. So, what are the pros of having a sole proprietorship and not bother with any of the other structures? It's easy to set up. A sole proprietorship is very easy and the least expensive structure to establish. There's no need to file in any sort of incorporation documents. You don't have to register with the state, although you still may need a business license depending on what kind of business that you're in, if there's any licensing requirements. And of course, it depends on where you're located, what requirements may or may not be needed in your municipality. You got full control. I mean, you're the sole owner. The business is you. You are the business. You can have complete control over all business decisions. You don't have to talk to a partner. You don't have to consult with shareholders or any board members. Maybe if you have a spouse in there, you may have to talk to them, but that's not part of the corporate. That's an understanding between two people. And you don't have a formal partnership, but you have a partnership in understanding. Now, and then of course, simplest, filing taxes. Because as a sole proprietor, you're not legally separated from you as the owner. So business income is reported on your personal tax return as ordinary income. Now, you may end up paying a self-employment tax, but the process is pretty straightforward. Now, there are some cons to going sole proprietorship. The most biggest is being unlimited personal liability. So as the owner of the business, with the business is you and you are the business, there's no legal distinction, and therefore you are personally liable for any and all debts or legal issues that your business suffer from. So when they're not suing, even if you got a business name, they're suing you as an individual. Now, of course, now keep in mind that as a sole proprietor, you're also limited in your access to capital, because it's challenging to raise funds, whether it be through a grant, whether it be through business commercial funding, or even investors, because banks and investors typically prefer working with incorporated businesses which have more legal protections. Donors who are looking to donate to nonprofits and donate grants to them, they want to see a business that's incorporated and with its own business and entity and function, so that its sole purpose is to go about the mission that you say your foundation or charity is working towards. If you're sharing that with your personal account, they can be concerned that gift funds will be used for personal and being commingled with your personal accounts. So even in the grant space, it's still important to have a structure. In many grants, they usually have, at minimum, you got to have an LLC anyway. And then lastly, there's also limited growth potential. So as the sole proprietor, there's less flexibility for expanding your business and bringing in partners, because the business is you and you are the business. So let's talk about LLCs. Now, most people out there, they know when they think business, they think about LLC. The LLC is the most popular, well, it's maybe one of the most popular. Sole proprietor is sort of, technically, it's the more popular to go unincorporated. LLC is probably the most popular corporation to create. Now, this is typically pretty much any small or medium-sized business is going that route, because it combines the flexibilities of a sole proprietorship with the legal protections of the corporations. Now, keep in mind that in the LLC, all the members are, the owners are considered members. They enjoy limited liability, and that means that their personal assets are protected from business lawsuits and debts. So even as a member, even as a sole member, all of your personal assets, if your house is in your name, your car is in your name, it can't be attached to or attacked and confiscated as assets if you run into a business problems or liability, and the business is found liable, and that they seize all assets that their business owns, not your personal stuff. So, which is probably the single greatest benefit. Okay. Secondly, is flexible tax options. Even though you have an LLC and it's limited liability, by default, if you are a single member, that means you're the only owner, you're going to be taxed very similar to a sole proprietorship. And if you have a multi-member LLC, it'll be taxed more like a partnership. However, the LLC can elect to be treated like an S Corp or C Corp, depending on what's most beneficial. So I would recommend that you seek a CPA, especially one that's an expert in taxes for small businesses, and then they can work the numbers to see which one makes sense for you. Even if you incorporate as an LLC, you may choose the tax like an S Corp or C Corp, so keep that in mind. Now, LLC, of course, the third pro is easy management. An LLC has far few regulations than the corps and far less paperwork. Now, there's no requirement for any type of board of directors or any formal meetings, which makes it easy to run your business on a day-to-day basis when you have an LLC. However, the LLC does come with a few cons. First of all, you're subject to self-employed tax. So unless you decide to elect to be taxed as an S Corp, you as the LLC member will be subject to self-employment taxes on your share of the business income. This typically means that you're going to have higher taxes compared to, say, an S Corp, where the business doesn't pay any taxes, and you pay as the income is being passed through the business to you, and it's usually at a much better tax rate than the self-employed tax. Also, well, that's pretty much it right there, because I'm not going to go into the real specifics. We don't want to turn this into a tax class. But the second con is that an LLC is more expensive to start than sole proprietorship, but it is relatively easy. It's more expensive than a sole proprietorship, but it may not be hugely more expensive depending on the state that you're going to register in. Say, for instance, in Ohio, it's only $124. In other states, it's $200 or $300. And in addition to that, you'll need to file articles of organization with your state, which is that $124 I was talking about, and then remain in good standing. You also have limited growth potential, because although the LLC offers flexibility, it may not be the best option for business seeking large-scale growth or public investment, say through a stock offering. LLCs can't offer stock, And so that's going to obviously limit your ability to attract investors. But typically what you want to do is, once your business reaches a certain level, you may want to consider restructuring your business and transitioning from an LLC to an S corporation. Speaking of S corporations, that is a special type that allows profits and losses to pass through the business to the owners. So even though the business earned all the money, the business doesn't pay any taxes. There's a line item where it says we earned this much minus expenses is this profit. This was distributed to the owners, and then taxes are paid at the individual owner level. So, but in every other respect, very similar to the LLC. But S corps have a much stricter eligibility requirement and formalities to show. So even if you're looking to go S corp, you got to make sure you're eligible for it first. But I'm not going to go into the eligibility in this video. But I will tell you this: the pros of an S corp are the tax savings that I mentioned, the pass through. So just like the income passes through, the tax liability passes through. So S corps can draw a salary and take dividends, which will help reduce their self-employment tax burden, because only the salary portion is subject to payroll taxes. Any dividends that they take are not. And you guys that know who's seen that, and you've taken K1, you filed K1s for your draw. Also, you enjoy that same limited liability protection like an LLC and the C corps. Right? Your personal assets are fully protected and you're totally separate, so you're good there. Sorry, I dropped my notes. Okay, and thirdly, the members enjoy limited liability, meaning their personal assets are protected, like I said before. Now, S corps do have a few pros, they do have a few cons. I'm sorry, I lost my train of thought there. The pass-through taxation, that's the third part. S corps allow for pass-through taxation, which means just like the income pass-through, the tax liability pass-through as well. Now, to qualify for S corp, business have to meet certain criteria, including having no more than 100 shares, so on and so forth. There are some formalities too as well. And then they have limited flexibility of ownership because you're limited on how many people can own it. So just keep that in mind. Now, C corp is a more traditional business structure that most people know. This is typically used by larger businesses and corporations when they plan to go public and issue stock. Now, C corps are separate legal entities totally from the owners, and they pay corporate income tax. Technically, they don't have owners, they have shareholders, and if you're a majority shareholders, you really control it. And so control is the form of ownership. Shareholders are taxed, the business is taxed, and then when shareholders get their share, they're taxed again. So it's double taxation is an aspect of the C corporation. So the pros are the limited liability protection that I was talked about before, and you got unlimited growth potential because a C corp can offer multiple classes of stock and have unlimited shareholders. This makes them attractive options for business planning to raise significant capital or go public. The tax-deductible business expenses, however, you can enjoy because you can deduct a wide range of business expenses, including your salary, business benefits, and other operating costs, which can reduce your overall tax burden. However, C corps do come with a few cons. The double taxation that I talked about before. It's more complex and costly to run a C corp because you have the cost of forming A C Corp, the cost of maintaining a C Corp requires a lot more paperwork, formalities, and other expenses as compared to an LLC or S Corp. You need to file articles of incorporation, issue stock, maintain a board of directors, which oftentimes you can get people to sometimes serve for free, but oftentimes you get top-notch board of directors. You typically may have to pay them a stipend to contribute to your company. And there's other requirements as well. And of course, there's far more regulations with C Corps and far more oversight than the other business structures. This can make it more challenging to manage the C Corp, especially with smaller businesses. Now, I didn't want to go fully into it. Now, I know most of you guys, entrepreneurs, you're probably going to go the LLC route. It's the most flexible. It's the easier to start to get your business going. Then you can make considerations later. But choosing the right business structure should be considered in your long-term goals, as well as your comfort level and with liability and how you want your business to be taxed, because we talked a lot about single and double taxation. If you're just starting out and you want to keep things simple, I think you want to go the LLC route. That's the best option, because at least even at the beginning you can enjoy limited liability, because of course we know that all the challenges of starting a business, and so that you don't risk your home, your car, your retirement in the pursuit of building a business. On the other hand, if you're planning to grow quickly, attract investors, and eventually go public, C Corp could be the right fit. But again, that's usually if in cases where this might be your new business, but it might not be your first time starting a business and you've gotten good at creating businesses. Some of you serial entrepreneurs out there, this might be your second or third rodeo, so you might be ready to go more advanced right out the gate based on your previous experience. So that's always something. But for you guys, your first time around, and in most cases, you probably want to go LLC first. But remember, you can always consult with a business attorney or a financial advisor to ensure that you're making the best choice for your specific decision. So I hope you found this video helpful. If you enjoyed it, I ask that you share with someone who's considering the business. I also ask that you like the video and click the like button, and add comments below if you have any questions. If you have any questions about any of this, you can reach out to me. I also ask that if you're not already a subscriber and you want to enjoy a lot of my other content, that you subscribe to my channel and hit the notification bell. That way, every time I issue a new video, you will get a notification knowing, so you can immediately go in and check that out. So until next time, you guys take care. Good luck on starting your business.